All right, we are live. Hello, everyone. Boris Musheyev here. Let me know if you guys can hear me. Hello. I think you should be able to hear me. Hello. Yes. Cool. All right, let me know if you guys can hear me live. We are here to answer your tax questions. Let's see if we get that going over there. Can I have the books, Mariana?
Not in here.
All right, let me know if you can hear me in the chat. I would really appreciate it. Let me know if the sound is coming in good, and if there's any issues with it, let me know. Let's see. Should be good. Okay, cool. All right, welcome to Tax Reduction Live Q&A. So every Thursday at 12 p.m. Eastern Time, I, Boris Musheyev, come to you to answer any of your tax questions. So anything that you have, any tax questions about any strategy, about how you can reduce your taxes in your business, this is the time to ask. Mariana, say something. Let me see if people can hear you.
Hey, everybody. Can you hear me?
All right. Please let us know if you can hear Mariana. She's going to be reading out the questions. Cool. All right. So Steven Anderson says, hey, Boris, I won something last week, but I didn't get a chance to get that email to send to you. Mariana, share our email address, boris.musheyev. I think he won something last week. Let's get that going. Yes. All right. Everybody can hear us. All right, guys. So here's how this goes usually. This is a live Q&A. We go for about an hour. The most participated questions wins 3 prizes, right? We pick 3 people to win. S Corporation Tax Secrets book. This baby usually goes right now online for $9, but it's yours for free. We'll mail you the physical copy, although we sell a download copy for $9. Thinking Outside the Tax Box. This is also my book. On Amazon, I think it's like $21. Today, it's yours for free. All you have to do is just ask me tax questions. And the third winner gets to win a free 3-year look back. Now, in order for you to win that, you have to be a business owner. So make sure that you are a business owner, participate till the end. And if you do win, that I will personally review your business and personal taxes. You'll schedule a call with me, and I'll go over my findings. Your audio is good. Thank you. What's that?
Can I have the mouse, please?
The mouse, yes. All right, cool. All right. Any tax questions, guys? Let's go. This is the time to ask me any tax questions that you have. Now, one of the things that I am going to be actually doing a webinar pretty soon. It's going to be only for our in-house clients. And one of the things that I'm going to be discussing on that webinar, can we turn on the lights? One of the things that I'm going to be discussing on that webinar is how to maximize your year-end, right? Maximize year-end deductions. Okay, so let's kind of go over 3 things on this Q&A, and then we're going to start taking questions, okay? So number 1, let's just do prepaid expenses, retirement, specifically solo 401k. Okay, number 1 is prepaid expenses. Now, here's the thing. Actually, IRS allows you, even if you're a cash basis taxpayer, to prepay your business expenses and take a deduction. Now, in order for you to take that advantage of that, it has to meet the safe harbor rules. And the safe harbor rules basically says as long as you have a contract for 12 months, the great example for this would be rent expense. If you're renting an office space and you feel like you've got a pretty big expense, pretty big income this year, you want to prepay your expenses, you can actually prepay 12 months worth of your mortgage. You can also prepay 12 months worth of your insurance and so forth. You can actually prepay some of the expenses before year end. Now you might say, well, Boris, if I do that then, okay, if I do prepay my expenses, I'm not going to have an expense next year. And you're correct. You might not have this expense. That's why it's really, really important that you work with a tax advisor, because sometimes bringing you down in your tax bracket this year is better than next year. Maybe your income may not be as high next year. Maybe this year you just had this year where a big customer came in and paid you, and you want to make sure you can write off as many expenses as possible. Maybe this could also help you with your QBI tax planning. Super, super important. So make sure that um, you get that going. Prepaid expenses. The second thing is retirement. For those of you that have a solo 401k, guys, solo 401k is not going to work if you don't put the a deferral, 22,500 that has to come out of your paycheck into it. So if you have an S corporation and you take a W2 salary and the year is over, you can't do 401k, solo 401k, if it was not part of your W2. So make sure if you don't have anything on a solo 401k as part of your W2, let us know. We currently have a client. She basically has a solo 401k. We spoke to her financial advisor. She processes payroll once a year. Well, you're not going to be able to take a solo 401k deduction if the solo 401k is not part of your payroll. So really, really make sure that whoever you're working with, oh, your tax advisor, bring it to their attention and make sure you put it as part of your W2. Okay. And I never recommend doing a payroll at year end, nor does my company. We never do this because why? Because you can miss out on certain tax strategies. Now, home office. A lot of you do not write off home office properly. You think, hey, I'm just going to give my accountant some expenses that I had for the home office and they're going to deduct it. That is not allowed. Okay. You need to do what's called an accountable plan. Accountable plan is basically a piece of document between you and the business, okay, or between the business and its employees, which is you are an employee, and says, hey, if you incur expenses for the business, we'll be able to reimburse you for it. Now, for you as a business owner, that's important because you can work from home and be reimbursed from the business. Now, most of you on this call are probably S corporation owners. You cannot take a home office deduction without an accountable plan. Make sure you have that set it up. Speak to your tax advisor to get that going. All right, I hope this was helpful. Let me know if this was helpful. Say helpful in the chat. And now we're going to go into the questions. Mariana, let's start with the questions.
All right. First question coming in from Novik RN.
Novik, hello, Novik. Say hello in the chat, Novik. I want to see that hello. Let's go.
He says, hello, Boris. How would you recommend purchasing investment property for a minor child? We invest in properties and would like to have our sons to get started as well. He is under 18 years old.
So this is Novik, right? Novik says, hey, we own properties. Now we want to buy more properties and we want to get our child involved. And our child is under 18 years old. How do you suggest or how do you recommend investing in a property where we can include our children as well? So here's the thing, right? It gets a little bit tricky because, so this is Novik, we said, right?
Mm-hmm.
So Novik wants to invest. Let's just write this. Invest on the child's name. Child's name. Okay, so here's the thing. Can you buy a property, put it into an LLC, and put it under your child's name? You absolutely can. Now, if you are going to invest in a real estate property under your child's name, first of all, when you want to start investing in real estate, don't just invest for the sake of investing. Invest for the sake of tax strategy as well. Now, your child probably doesn't have other income like you do. And investing under his name, he could have those losses, but these losses will be no good for him because he doesn't have any other income. You might want to still put him as an owner of that LLC, that he can own a property with you, structure it in a way where you get those losses of that property and you get to deduct them if you are a real estate professional. Normally, when businesses want to get their children involved in investing, such as real estate, we're probably already crossing the line from not only tax strategy, but also asset planning. And this is a really, really important part for every business owner. I normally recommend getting into this asset planning and with investments and holding company once your net profit hits $1 million. Once your taxable income is $1 million. Now, a lot of people might disagree, like, why not? You need to do asset planning and asset protection right away. Okay, maybe, right? But not everybody who's making under $1 million in net profit can afford such an expensive attorney fees. Now, what happens is that you could hear a lot of attorneys saying, oh, pay us $2,000. We'll set up entity 1, entity 2, entity 3, LLC this, under your name, under your child's name, or we'll set up some trusts for you. All of that is baloney. Do you know why? Because when you set up things like that and you have trust, these things need maintenance, annual compliance, annual filing. And what happens is that all of this gets screwed up. Sometimes we get clients that are like, oh yeah, I set up my trust in some entities and some holding company 3 years ago. Why did you set it up this way? Oh, I don't know. My attorney recommended. Where's this attorney right now? Oh, I have no idea. Well, what happened to these entities? What happened to these trusts and paperwork? Yeah, I have them somewhere. No, no, no. Okay, not going to work this way. So you want to get your children involved? Amazing. Number one, I want to talk about, hey, is there a tax strategy involved in it? If rental real estate losses are going to be if rental investments are going to produce a loss that you can deduct, well, how can we get our children involved, but also deduct those losses? That's important. Okay. Now we're probably crossing into the asset planning as well. Generally, when there is some kind of an asset planning, asset protection, or anything of that stuff that also coupled together with tax strategy, we personally work with attorneys to make sure the clients get that. Because remember, guys, what do I always tell you? If you have a tax preparer, you do not have a tax advisor, and I guarantee you, you are overpaying in taxes. Let's stop that. Get yourself a tax advisor. Mariana, next question.
Question from Joe. Do we have
Joe?
Joe.
Hello, Joe. Say hello in the chat. Let's go.
Do we have any restrictions on short-term rentals business loss to offset active W-2 income?
Joe was like, hey, Boris, I may not have a business. I have a W-2. What can I do to save money on taxes? All right. Joe is asking Boris, I want to ask you a question about short-term rentals. Short-term rentals, basically, for those of you that don't know, we're going to explain what that means. But short-term rental is not only a strategy for businesses, but also a strategy for W-2 earners, okay? Because with short-term rental, any losses produced by short-term rental can be deducted against your active income, okay? Now, by definition, IRS says that by definition, short-term rental is when average stay per tenant is 7 days or less. So let's say you have 2 tenants, right? Tenant number 1 stayed in your place 2 days, tenant number 2 stayed 10 days. The average 10 plus 2 is 12, divided by 2, average is 6. So that qualifies already. And you have to actively participate in managing your short-term rental, at least 100 hours a year, okay? And it has to be more than anybody else that helps you with managing your rental. So let's say it's you and a management company. I'm just making this up, right? And you're actually actively managing, and so does the management company. But the management company puts in more hours than you wouldn't qualify. So you need to meet these 2 tests, okay? Once you meet these 2 tests, Joe, there should not be any restriction. I hope that answers your question. Next one.
Question from Jules.
Jules. Hello, Jules.
For STRs...
Wait. Jules, can you say hello in the chat? Let's go. All right, Jules.
For STRs, material participation is the $100 per property.
100 hours, probably.
I'm sorry.
Mariana, even you making me write dollars. 100 hours. She's not an accountant by trade, guys.
Don't say what I am, because that's embarrassing.
Don't
Okay.
say what you are. I wasn't gonna say what you are. She's a teacher, okay? See, she used to teach little kids, the 5-year-olds and the 4-year-olds. She shaped their minds, guys, okay? Until I said, you need to come to Boris M Tax and make a difference. You need to shape my mind. Okay, let's go.
For STR's material participation, short-term rentals, I know that.
Yes.
Is the 100 hours per property, or can you combine hours on 2 short-term rentals?
Jules, I would have to look that up. I believe it's per property, 100 hours. I know there is a material participation 500-hour rule for regular rental properties. For those, you can combine. For short-term rentals, I don't know why, but I'm having such a brain fog right now. I would have to look it up and get back to you on the next live. But I do believe that it's not combined. I could be wrong. Next.
Question from... Oh, this just jumped all the way down. Question from Diljit.
Diljit. Hello, Diljit. Say hello in the chat.
Hello, Boris. Can I keep same EIN while converting from single member LLC to S-Corp while filing Form 2553? How can we do that?
Okay, LLC to S-Corp, right? Same EIN. So while I'm answering these questions, guys, I would like to ask Mariana to bring me a cup of tea, please.
Sure.
Thank you. All right, cool.
What kind?
Diljit, anything that's there.
Sugar?
Doesn't matter. People can hear
I
everything
know. I'm
you're saying.
asking you how you want your tea.
All right. You're taking the microphone with you, by the way. Okay. Uh, we don't want to hear what you're talking about in the kitchen there. Okay, guys. Yes, we're having a lot of fun in the office. Okay. LLC. So Diljit is asking Boris, if I'm going to convert my LLC to an S corporation, I'm going to have to file Form 2553. That is correct. You would have to file Form 2553. Do I keep the same EIN? That is correct. So when you form an LLC, legally, you will always be an LLC, regardless if you make an election to be converted to a C corporation or you make an election to be converted to an S corporation. Legally, you will always be an LLC and you will always have the same EIN number. Now, in order for you to become an S corporation, you need to file Form 2553 by March 15th of every year. If you are a calendar year taxpayer, which most businesses are, small business owners. Now, after March 15th, it is considered late, but you can still file a late election. Now, same Form 2553. Now, I have a video on YouTube. Now, I never recommend filing Form 2553 on your own. I really don't. Now, I've seen that a lot of people still don't take my advice and they still do it because I can't control everyone. So I've decided to make a YouTube video on this, exactly how to do it and to do it the right way so that it can pass the IRS election right away. Now, if you are doing it, if you're doing it late, I should have it in that video. I think that video, the name of that video is how to file an make an S corporation election. It's on my YouTube. If you scroll down, I guarantee you can find it. All right, next question. Mariana is not here. Let me see what I can see here. All right. Nastra says, I have urology clinic, S corporation, and have employees. Okay, but not able to offer retirement to them yet. Can I create a management company and open a retirement account for myself? That's actually a very good question. I'm glad you brought that up. Oh, wow, that's a lot of tea. Thank you. So, Mariana, I read a question from Nastro. I think you took my coffee. You want your coffee?
Oh.
This is your coffee. Stop taking my coffee. Okay, Nastro. So, Nastro says, I want everybody to pay attention to Nastro's question. Okay, it is a bomb question. So, Nastro says, he has, what kind of clinic did you say you have, Nastro? Urology clinic, right? So he's got urology business, which is an S corporation. And he says, I have employees. Okay. He said, I have employees. I'm not offering a retirement plan yet to my employees. I imagine you're not, because it's going to cost you money and it can get a little expensive. I totally get that. And he says, can I create a family management company or just a management company, right? For myself, pay myself from an S corporation into the management company and use and take retirement benefits. Unfortunately, the answer is no. What happens is that we have a law and the rule that says any business in which you have majority ownership and you have a controlling ownership, which would be in your case S corporation and management company, if you open a retirement account in one company, you have to open it in the other company and provide it to all the employees. They fall under the umbrella of something that's called grouping. Okay, so they do that they did that law specifically so businesses don't open up management companies and just make retirement for themselves and not for employees, because that would be considered discrimination. Now, I totally get your concern about having a retirement account for employees and it's expensive. Let me know, Nastro, if you're still in the chat, in the live. I'll get more into details and maybe help you better understand how retirement works and that it's not that expensive, and maybe that could help you out. Let me know if you are here. He's here. Mm-hmm. He said yes. Okay, so Nastro, if you are still here, then let's get into it. Now, here's the thing. There's really generally for a business owner, when you don't have employees, you can open up SEP IRA or solo 401k, simple, cheap, nice deduction. When you do have employees, you have to open up what's called 401k, or you can open up simple IRA. And let's kind of get into details of what this means, okay? Now, simple IRA and 401k, the difference between both is the limit contribution, how much you can contribute. With the 401k, you can contribute, what is it? I think it's within, damn, they change the numbers all the time. I think it's like 61,000 for 2023, right? Simple IRA, it is 13,500, and plus employer, yeah, that's between employer and employee. So really the contribution limits. When I speak to clients, I tell them, hey, do you want to maximize your own retirement, or do you want to open it as a benefit to your employees? If they say, Boris, I don't care about retirement, I want to invest in real estate and do all kinds of things, but I just want to offer something nice for my employees, simple IRA is the way to go. With simple IRA, you have to put away 2 or 3% to their retirement account, whatever their salary is. And you don't have to do 13,500 for yourself from your paycheck if you don't want to, if you don't believe in it. But if you say, no, Boris, I want to make it for myself, then I would say go with a 401k. And the way 401k works, there's 2 types of contributions. Contribution number 1 is from your W-2. Contribution number 2 is from the business, right? I'm just going to use the terms that you guys understand. From W-2, that means if you take a paycheck, okay, Nostro, that means you can put away from your paycheck $22,500 for 2023. Now, that doesn't mean that you're now obligated to put away for your employees up to $22,500. That's your own paycheck. If you have a Joe working for you, and Joe makes $100,000, great. If he wants to pay $22,500, whatever he makes, I don't care. If he wants to put away $22,500 from his paycheck, that's his problem. He's allowed to do that, and it's not going to affect you in any way. You, as a business owner, may be required, the way you set up your plan, put away 3 or 4% for each employee, and you can set up your 401k plan. I will only put money away for you if you participate in the plan. If you don't participate, then I don't have to put it away for you. So in my experience with most of the business owners that I work, about 70% of employees don't voluntarily participate. And because they don't participate, my clients are not obligated to put away 3 or 4% of their salary. They still max out at $22,500. And if you're over the age of 50, this number is now $30,000. Let me know if that was helpful, Nostro. Next question, guys.
Okay, next question is coming in.
Okay, Nostro said helpful. I see one helpful. All right, cool.
That was from before. Joe, question from Joe. To write off newly purchased vehicles over 6,000 pounds this year, is there any restrictions on the company's revenue?
Okay, Joe is asking a really good question, right?
He did say it was very, very helpful.
Who? Nostro? Okay. Nostro, by the way, if anybody's interested on working with us on your tax advisory, we're running like crazy promotions right now. So for those of you that are watching live today, can we give away promotion? Can we do $500 promotion? We'll do a $500 promotion. For those of you that are watching live today and you want to sign up with us on your tax advisory services, we'll give you $500 off. Mariana is going to give you a link to the calendar. When you're filling out, just say, hey, I'm coming from a YouTube live, okay? For those of you that are watching replay as well, you're more than welcome to. Just make sure you mention it on your call with my team. Hey, I am from YouTube Live from October 12th. All right, it's October 12th promotion only. Anybody that is watching this live, we'll give you $500 off. We'll let my team know to look out for this. If you're interested, say interested in the chat. It is, so you need to visit to www.taxplanningcall.com. That's www.taxplanningcall.com. Again, www.taxplanningcall.com. Don't forget to put www in the front because otherwise link doesn't work. I don't know. To be honest with you, I screwed up that domain somehow. Still can fix it. It needs a www. Okay, now, next question, Mariana. We had a good question. I forgot. Who was it?
From Joe.
Joe, say hello in the chat. All right, Joe had a question.
To write off newly purchased
vehicle. Yeah.
Over 6,000 pounds for this year, is there any restriction on the company revenue?
Okay. Because you're taking bonus depreciation, there is no restriction on company revenue. So even if your net profit is zero and you're going to buy a vehicle, let's say your deduction, let's say, is going to be $20,000, right? Your deduction is $20,000, so you will take a loss of $20,000. Now, sometimes when you're an S corporation, it doesn't mean just because you have a loss in the business, you can actually take a loss. You have to be really, really careful. We just finished the tax return for one of our clients, and she has a $46,000 loss, but she can only take $28,000, $14,000 or whatever the difference, the 16,000 is not tax deductible. It's called suspended. She doesn't have enough basis in the business, not enough equity to write off that loan. So it gets carried over. When you have losses in your business, guys, please don't just think, all right, great, I have a loss, I'm going to get a nice deduction because I have a loss. No, speak to your tax advisor about your losses. Are your losses tax deductible this year? Why not? How much is being carried forward? Will it affect my estimated tax payments? And so forth. You must be working with a tax advisor. So Joe, for you, if you're going to buy a vehicle because you really need it, good. Just make sure you're able to take those losses. But if you're buying a vehicle to get a tax deduction, and because so many gurus online and all these accountants and non-accountants recommend you, please don't. Okay? Because if you buy a $100,000 vehicle, I'm just going to assume $100,000, and you're in a 40% tax bracket, you're only saving 40% of your purchase price, right? Whatever is deductible for you. But you're still losing more money out of pocket. And then you're like, oh, I don't need this vehicle, I need to sell it. IRS says, oh, we need to recapture depreciation. You took way too much depreciation your first year. Now you're selling it. We want it back. So many business owners end up making this mistake. Don't be that business owner. Speak to a tax advisor. Let's go. Next question.
Question from S. Chander.
By the way, Joe, let me know if that was helpful.
Question from S. Chander. Do minor kids working for their parents' partnership making under standard deduction and contributing to our Roth IRA have to file taxes? No taxes withheld from their payroll and no W-2 or 1099s created.
Okay, so let's go into what S. Chander says, okay? S. Chander, say hello in the chat, please. We want to know you're here. All right, cool. So S. Chander says, all right, she said parental partnership, right?
Parent partnership.
Parent partnership, okay. Okay, so the reason S. Chander is pointing out on everybody who has children or wants to employ their own children, you have to understand something. When you have a sole proprietorship, a single member LLC, or a sole proprietorship, by the way, before we continue, guys, anybody that asks the most questions gets 3 prizes today. Besides the promotion that we're giving everybody, we'll send you for free an actual copy of S Corporation Tax Secrets book, Thinking Outside the Tax Box. This thing is on Amazon for like $21. It's yours for free. And if you have a business, you can win a 3-year look back. That's right. I will personally review 3 years worth of your returns. You'll schedule a 45-minute call with us, and I'll go over your return and let you know what your findings are. But you just have to ask questions. That's all I ask of you. Okay, cool. So when you employ your children, generally speaking, when you pay your children a salary, right? So for 2023, anybody in America can make up to $13,850 and not pay any income tax on it. Okay, anybody in America. So that gives you, the business owner, an advantage to hire your child. Pay your child $13,850. Your child doesn't pay any income tax on it, and you get it as a tax deduction. Now, if you have a single member LLC or a sole proprietorship or a parent partnership, just like S. Chander, not only do you get a deduction on this, you also don't have to pay payroll taxes. So S. Chander says, Boris, I'm paying my child $13,850 and from a parent partnership. Does my child have to file income taxes? Now, here's the thing. For the federal tax, remember, we have 2 tax authorities in America. Depending what state you're in, most of states have 2 tax authorities, right? One of them is federal, another one is state. So I don't know what state you live in. I live in the state of New York, okay? So for federal, I don't have to file a tax return because it's on the threshold amount. There is no tax I'm going to pay. For New York State, right, our standard deduction, it's not $13,850. If I'm not mistaken, it's about $7,500. I could be off by a few $100s, okay? Because I made more than $7,500, I would have to file a tax return. Now, your question is like, oh, Boris, I'm paying my kids. They're not on the W-2, and I don't give them a 1099. First of all, you should not be giving them a 1099. Even if you're a parent a partnership, if you do give them a 1099, they would have to pay payroll taxes. Definitely process payroll. Definitely process W-2. Whoever payroll company that you have, whether it's Augusto, Paychex, ADP, over there, you can write that this employee is exempt from FICA taxes, and then you'll get a W-2 and you can file state. Now, if you are in a state where standard deduction is as high as federal or in a non-taxable state, I would just say continue doing what you're doing. I hope that was helpful. Ask Chandler, let me know, please. Mariana, any other questions?
Yeah. Question from Irene. I'm a trucking escort and contract other brokers. My expenses are so high because it shows the payment to the brokers, which reduces my profit. How do I record so my numbers look better for a bank loan?
All right. So, okay, he says he's an S corp.
I think it's a she. Irene?
Irene. Okay, she says she's an S corp.
Yes.
Okay, so S corporation and trucking business, right?
Yes.
Trucking business. So Irene says that I pay brokers. And what else?
She contracts brokers. Expenses are high because it shows payment to the brokers, which reduces her profit. How do I record so numbers look better for a bank loan?
So Irene, I don't really know the extent of the situation. What I'm hearing is that you have a trucking business and you contract brokers and you pay a lot of expenses to brokers. Now your net profit looks small when it comes to taking out a bank loan. And you say, how do I make it look better? So I'm not really sure of the extent of the question, but this is what I'm going to tell you. If you have assets, if you're a trucking company and you buy trucks, I'm assuming maybe you do not, I don't know, because you said you have brokers. The truck purchases are not considered expense for the purposes of the bank loan because they go on a depreciation schedule. So keep that in mind. As far as the brokers, I mean, it is an expense. You can't move that expense from profit and loss to balance sheet like you can with the truck purchases and asset purchases. Next question. And hopefully that was helpful. Let me know if you want to elaborate on that question. We've got time here, so go for it. All right, next question.
Another question from Joe.
Joe?
Follow up on the short-term rental. This year, we are operating a short-term rental business, and we are trying to use cost segregation study to maximize deductions this year. Is it fine we change the business to long-term one?
Cost segregation, change long-term. Okay, so Joe, you're saying, Boris, this year we're a short-term rental. I'm assuming you meet all the IRS qualifications, which is 7 days, 100 hours participation, and you participate more than anybody else on this property. You're going to use cost segregation. For those of you that don't know what cost segregation is basically a process of taking a property that you just bought, and instead of taking a regular depreciation and doing an accelerated depreciation, about 25% of the purchase price can be deducted in its first year. Okay, so that's what cost segregation is. Now, cost segregation generally produces a rental real estate loss. When you are not a real estate professional, you can't take that loss. So cost segregation is not helpful to everyone. Now, if you have a short-term rental, this now becomes an active business, active income, and you're doing cost segregation to offset those losses. Joe is asking, Boris, I can be short-term rental, do cost segregation, do everything, and then convert it to a long-term rental. Is there an issue? Not that I know of, Joe. So you should be fine as long as you meet all the qualifications here. And then for whatever reason, if it converts to a long-term, due to, I don't know why you would want to do that. I'm not sure. This is just a live, so I don't have all the information. What I've generally seen, though, Joe, is that the cash flow on the short-term rentals is much higher than on the long-term rentals. So would I recommend going this route? Probably not, simply because even though you do cost segregation, you still most likely will generate losses on a long-term property because you're still going to have depreciation every year. Now, those losses will not be tax deductible to you. I would recommend going with a short-term rental. Next question.
A question from Irene. Do I have to offer employees insurance benefits and retirement if I have over 5 employees?
Retirement or health insurance, Irene? Can you clarify? By the way, how many of you who are watching live are already subscribed to my channel? If you are a subscriber, say subscriber. But if you're completely new and caught me on a live on YouTube, say new. So just so that I know how this whole YouTube thing works. Please let me know in the chat. I would love to get your feedback. So if you are a subscriber, say I'm a subscriber. Or if you're totally new, just came across my channel and just write new. I would appreciate that. Thank you so much.
It's a health insurance. Does she have to offer employees health insurance benefits and retirement if I have over 5 employees?
Okay, good question, Iron. Okay, so Iron is asking, Boris, I've got more than 5 employees now. By the way, Iron, if you've got more than 5 employees and you don't have a tax advisor, I guarantee you're probably overpaying in taxes. Go ahead and schedule a call with us if you're interested to work with us. But as far as the health insurance, are you required? You're only required to offer health insurance when you have more than full-time equivalent, 50 full-time equivalent employees. Retirement, you don't have a requirement on the retirement. I don't believe there is a requirement on a federal level, but on a state level, there may be. So I know that in New York State, they recently passed a law that if you have like 10 employees or more, I have to offer retirement benefits now, right? So each state could have a different law, so you might want to take a look at that. Now, I do want to speak on a health insurance a little bit and give you some guidance. One of the reasons why a lot of business owners don't want to offer a health insurance to their employees, not that they don't want to because they're bad people, but it's just that it's expensive, right? I mean, I'm a business just like you guys. I'm running a business. I have employees, and health insurance, the group health insurance, I mean, they rip you apart there, right? Especially in some of the states. So there is something else that you can do, okay? And I did a video on this not too long ago. What's the name of that video, Mariana? It's about QSARA health insurance. We did it like a few months ago. Oh, not a few weeks ago. Can you find the link to that? Maybe we can put that in the chat. But Iron, so basically what happens is that if your employees want to get health insurance, you can reimburse them. Okay, you're like, hey, why don't you go buy your own health insurance on a marketplace, and I will reimburse you. Now, you're not allowed to reimburse them without a proper plan document, because otherwise you pay $100 a day penalty. It's stupid. It's crazy, but that's how the law is written, okay? So, but you can actually implement what's called a QSARA. And I talked about this in one of my videos. QSARA is Qualified Small Employer Health Reimbursement Arrangement. This basically says that you can reimburse your employees. I have to try to remember the limits. I'm going to use old limits because I don't remember the exact numbers, but it's about $5,500 per individual and about $11,000 per family plan. So if you've got people who want an individual plan, you can reimburse them up to $5,500 any amount, or up to $11,000 for a family. Now, again, not everybody participates. You put together a plan document, just follow some QSARA rules. We do it for our clients all the time here. And what happens is that they say, hey, you want health insurance? That's not a problem. This is my reimbursement policy. I mean, that's what I personally have in my firm, guys. I have a QSARA because group plan is expensive. And, those that want to take advantage of it, they take advantage of it. Some people have through spouse at their work, so they do it through their spouse. So anyways, definitely watch that video, Mariana. If we can find it, that would be super, super helpful. We have it? Perfect.
Yeah. I'm just
Iron, let me know if that was helpful. Next question. I'll take over, Mariana, for a second. All right. How many of you are actually new here? Jay says first time, just subscribe, video pause, subscriber. Okay, good. Subscriber. Okay, good. All right, Mariana, I think I lost where we were.
I know.
We got Simon. Simon, I know you emailed us about your question. So we'll get to your question soon. We're going in order. I remember your email.
Going up.
Keep going up. Okay,
Wait,
Iron.
right here. Are you finished with Iron's question?
I am.
We're up to Desi.
All right, Desi, let's go. Building 10 new warehouses. Should we use personal funds or business? We have 2 S corps. We won't use financing. What's the best way to write off the expense for the build? Okay, so guys, get ready for this question. Desi, say hello in the chat. Okay. Let's see. Okay. Desi says, Boris, we're about to start building 10 warehouses. No financing. Money is going to come from our S corps. We have two S corps, so I'm guessing that's where the money is. I did this wrong. S corp. Desi, are you saying hello in the chat? Let me see you say hello. Let's go. All right, 10 warehouse. Want to build 10 warehouses. First of all, Desi is saying, how do I pay for this? Can I pay from the? Do I have to fund the account from which we're going to build warehouses from personal or S corporations? And is it a write-off? The question I have for you, Desi, let me know in the chat right now. Are these warehouses for the business? It will actually make a big difference. Let me know. I'll give you like 10 seconds to let me know in the chat. Are these warehouses for any of these S corps? Nothing, right? No answer from Desi. Okay, so we'll just continue. All right, so yeah.
Okay, should I continue?
No. Well, I'll answer the question.
Oh.
Okay, first of all, I don't know how you're building the warehouses, what they are, but I'm going to assume it's like one entity is building them. So you definitely want to put it into a separate entity, which is an LLC. Okay, whether you're going to rent them to yourself or not, to your S corporations or not. Now, if the money is coming from the S corporation, there's two options that you can do. Number one is loan it from the S corp to this account, which is going to build warehouses, but only if you're planning to pay the money back. If you're not planning to pay the money back, then don't loan it. Take a distribution from the S corporation and then contribute it to your warehouse account, which is an LLC entity or whatever that may be. Now, anything that you built for the warehouse is not a write-off, right? Because remember, we have something that's called depreciation, whether you have a residential property or you have a commercial property. You have to take a depreciation. So if the build out was $1 million and it's a commercial, generally you would have to divide it by 39.5 years, generally, right? But if you do cost segregation and allocate everything out properly, then about 25% of that $1 million could be deducted in its first year. Now, whether it's deducted or not is maybe questionable. Are you a real estate professional? Is it a self-rental? Now, this right here, guys, this is not something that you should take an answer from a YouTube live and run with it. You've got to speak with your tax advisor. This requires careful planning. Next question, Mariana.
Question from Mouse.
Mouse, all right.
I am an S-Corp owner, no employees, and I am planning on working from overseas starting January 2024. Will I still have to run payroll, I guess, using W-2 even if I don't live in the state?
Okay, Mouse, I'm going to skip this question because anything that is foreign related, anything that's overseas related, I don't come close to it. It's complicated, it's tedious, and there's a lot of rules and regulations, and unfortunately, I would have to skip this one. I apologize.
I'm sorry, can I have the mouse?
Next question.
Question from Andy Campbell. Equity stripping. I have an S-Corp with apartments with over 500K in equity. Asset protection people say to set up an LLC and have that LLC loan 500K to the S-Corp and put 500K mortgage on the apartments to reduce the equity. The question is, now the S-Corp has 500K in cash. So that doesn't help with asset protection if you get sued. So how do you get the 500K out of the S-Corp?
Speak to the asset protection attorneys. Let's go. Next question. Sorry, this is a very complicated situation just to discuss over a YouTube live. Next question.
Okay, Simon, after your video, my CPA said only if I pay to someone else and not to myself in my business category or not my business other category will not make income different.
Simon, you need to elaborate on that question. I have no idea. Which video are you referring to? You said after your video. Which video is that? And what do you mean pay myself, not pay myself, expense category, not? Sorry, brother, but just please elaborate. Next question.
Iron, can an S-Corp shareholder take a distribution instead of getting a salary?
Iron, you would have to do both. Let's kind of explain that, okay? How much time do we have? Okay, guys, we have 5 more minutes to go. We're going to answer Iron's questions in detail. All the other questions we'll do quickly, and then we'll be giving away the prizes. Now, before I continue, guys, for those of you that participate the most in this chat by asking questions, okay? Today we're gonna draw and we're gonna have a winner for S Corporation Tax Secrets book. We'll mail this baby to you. This book right here, Thinking Outside the Tax Box, currently on Amazon for $21. It's yours for free. And we're also going to do a 3-year look back if you are a business. So basically for free. Okay. All you have to do is ask the most tax questions. Mariana is keeping track of who's asking questions. She's going to give me the names. Now, we also just ran about 15 minutes ago a $500 promotion for anybody that is interested to work with us in your tax advisory. It's only available for people who watched live YouTube on October 12th. $500 off. You'll be speaking to my team, and and my team will take care of that for you. So if you want to schedule a call for a free tax advisory session, that's www.taxplanningcall.com, www.taxplanningcall.com. Again, that's www.taxplanningcall.com. And Mariana is actually putting the link in the video. Also, huge announcement, okay? Huge announcement. If you haven't subscribed, definitely subscribe. If you want to get on our email list, go on any YouTube video, download a free PDF, you'll automatically be on our email list. The reason that's important is because either next week or 2 weeks after, we are releasing a tax reduction podcast. Every week, just like I deliver you tax strategies in a video format, I will now be delivering tax strategies in audio format. While you're traveling, driving, running, taking a run in the morning, whatever that may be, you can now listen to a tax strategy anywhere you go. We'll be available on podcasts. We're already approved on major sites, so we'll be releasing that. So be notified about it. Definitely get on our email list. All right, now let's get back to Iron's. It was Iron, right?
Mm-hmm.
So Iron asked a question. Iron says, Boris, can I take a distribution and not a salary? So here's the thing, Iron. When you pay yourself a salary, you also pay what's called a 15.3% payroll tax, which is the FICA tax, okay? Social Security and Medicare tax. When you take a distribution, there is no payroll tax. Now, I'm assuming you have an S corporation. That's why you're asking this. Now, when business owners form an S corporation, they do it solely for the fact not to pay themselves a very high salary. Now, if they could by law not pay themselves a salary, they would, and I would not pay myself a salary, right? But by law, I am required to, and you are required to, if you have an S corporation, to pay yourself a reasonable compensation. So you can't pay yourself a $10,000 salary for working 40-hour weeks. You've got to pay yourself a reasonable compensation. I did a detailed video on reasonable compensation on my YouTube channel, but you have to pay yourself. So can you take out salary and distributions? Yes, you can. How much should your distributions be? As long as you pay yourself a reasonable compensation, you're good with distributions. All right, Mariana, I think Simon, did he clarify his question?
He said it was from the bonus depreciation video.
Yes, but what was the question though?
Can you please ask the question here? Because we don't have the email. This is the email that was before.
All right, next question.
Question from Diljit. For S Corp, is there a standard ratio between reasonable wage and distribution? If distributions are very high, even though wages are reasonable, will I invite an audit from the IRS?
That depends, right? This is who? This is
Diljit.
Diljit. So Diljit says, Boris, if I take very high distributions and my salary is not high as distributions, is it going to invite an audit? It could. Should you be afraid of an audit? No. Do you have something to back up that you came up with this reasonable compensation? For example, in our firm, we use a third-party software, and we actually run through scenarios with the client. Hey, what do you do in your business? They say, oh, 20% of the time, I'm just, let's say you're an attorney, a paralegal, 10% of the time marketing, 10% of the time I do admin work, and only 60% I do attorney. Oh, great. So you don't have to pay yourself a salary 100% as an attorney. So if you can document all of that, we do that with a software and we do that for all of our clients, then you shouldn't really be afraid of an audit. Next question.
Question from Jules. We are operating our short-term rental and use one room from our house. Can we do office deduction? Any other deduction strategy we should think about?
Wait, read it again. We are operating our short-term rental
and use
one room from our house. Can we do home office deduction? Any other deduction strategy? It's interesting. We had a similar question last week. Yes. So if you've got a home, 5 bedrooms. 1 bedroom is short-term rental. Perfect. You get a deduction, everything that is related to it. So let's just use an example, right? Let's say the short-term rental is 25% of your home. So 25% of expenses will be deducted. Okay. Now you're using Home office. Home office is 10% of your home. 10% of all of your home office expenses will be deducted. Any expense that is directly or indirectly related to that short-term rental or home office will be tax deducted. Next question.
Joe, transfer business to long-term next year. Oh.
Yeah, the transfer business long-term next year. I'm not sure what he's talking about.
I
Next.
think that's from the other question. Follow-up question from Nastro.
Nastro, hello. Say hello in the chat. Let's go.
Follow up on management company. Can I then offer retirement to my employees in my clinic as core and then open one up for myself in the management company and maximize my retirement contributions?
No, Nastro, I know what you're talking about. We're not going to get into details here, guys, but if you want to watch what Nastro was asking earlier. So Nastro, once you open up a 401k in your business with employees, you can't open up another one, another business. Be like, hey, let me do maximization here. It would still have to be unified for everything. Now, when you open up an S corporation, if you're under 50, you can still put away 22,500. Okay. If you're over 50, you can put away 30,000 plus whatever, the 3 or 4% company match. Now, if you're like, but Boris, I really want to maximize my retirement, what I would recommend, there's another option. So 401k comes with a little tail, okay? And that tail is called profit sharing. Profit sharing can be exercised any year. It can be used in 1 year, and that doesn't have to be used in another year. Profit sharing doesn't mean it's just a misleading name, okay? It doesn't mean you share profits, but it basically says, hey, I want to put more money for my retirement. If I do that, do I have to do for my employees more than 3 or 4% that particular year? The person who sets up your 401k, they will run the numbers as long as you give them W-2s for all the employees. So if you set up 401k, you want to do more, be like, hey, I want to see if profit sharing will make sense for me this year. And make sure when you do open up a 401k, it has that little profit sharing tail attached to it. Mariana, let's go next question. Guys, 2 more minutes. We have a hard stop after that.
Okay, first time here, just subscribe. Subscriber new to Lifey. Please send info on discount for strategy planning.
Somebody asked, please send info on strategy planning discount. Guys, you get a $500 off. All you have to do is book a call today, okay? Or whenever you're watching this live and say you're coming from October 12th live. It's www.taxplanningcall.com. Again, www.taxplanningcall.com. www.taxplanningcall.com. Let's go, Mariana.
Question from Joe. Another question on short-term rentals. I meet the 2 tests you mentioned. Is there restrictions on operating start time? Like how many days renting and how many customers served?
I don't think there's a restriction on it. But like, for example, you're going to start on December 10. You're going to meet the 100 hours. Like, remember, with any tax strategy that you approach and you want to pay less in taxes, like when you approach a tax strategy, like what is your intent? Right? It all comes out, my intent is to cheat or my intent is to legally use the tax code. A lot of people, you'll be surprised, no, my intent is to cheat, not legally, right? Like the intent has to be good there, right? I'm not picking on you, Joe. I'm just saying in general, like we've met some clients, we're actually having an issue with one client right now. He's just giving my team a hard time. He wants to cheat on his taxes and wants us to file it with cheating. Like, no, right? So like, guys, next question.
Second. Taylor says, very excited about the podcast. Have you done anything on opportunity zones?
I have not done anything or videos on opportunity fund zones. For those of you that don't know, opportunity fund zones are basically, if you have a capital gain from the sale of your business, from the property, stocks, whatever that may be, you can defer it and put it into something that's called opportunity fund zone. I'm not going to get into detail here, but those gains are deferred until the end of 2026, only a few years left. So we do work with some clients who have done it. We've referred them out, but we're not very big on that here. Next question. Just because, again, the reason is because it gets deferred only to 2026. So it's kind of pushing it back. Some clients would want that, but that depends. Next question.
How did Elon Musk get away with paying himself $1 a year?
Yes, but Elon Musk, guys, believe me, IRS is not concerned how much he's not paying into Social Security taxes of 15.3%, okay, with the Elon Musk salary. They're more concerned about the billions or millions of dollars that he has to pay on his income. So don't compare yourself to what is Elon Musk doing. We can certainly use the tax strategies that Rich are doing, Okay, so some people say, how can Donald Trump not pay any income tax? Well, you can also not pay any income tax. Just follow the strategy of real estate investing. Next question.
We actually have 2 questions, so maybe we can finish off with.
Okay, let's finish up all the questions. Let's stop at the whatever last question that you see. Then we got to announce the winners, and I have a hard stop. Let's go.
Okay, question from Svetlana. Can my S Corp reimburse pay my tuition as employee and shareholder over 20% ownership?
No, Svetlana. So we use this strategy for our clients if they have children who are over the age of 21. Then you can create what's called Section 127 tuition reimbursement, and you can reimburse your employees up to, or your children up to $5,250. The reason the child has to be 21 and over, because under 21, for this particular tax strategy, that child is considered an owner of the S corporation, just like you. So remember, rule of thumb, as a more than 2% shareholder of an S corporation, or 5%, I think it is, whatever that is, but as an owner of an S corporation, you do not get any fringe benefits. Besides the health insurance trick that we do, if you're more than 2% shareholder, you can put it through your W-2, get like almost a dip deduction on that. But other than that, there is no fringe benefits as an S corporation. Is it a bad thing? Not necessarily, but yeah. Next question.
Casey says Elon Musk takes stock options for his pay.
Thank you, Casey.
Chandra says, while paying minor kids from parent partnership, can the company contribute to children's Roth IRA on top of the payroll instead of children contributing from their account?
No, Roth IRA has to be contributed from the earned income. So it has to be from your children's earned income. Next question.
Desi responded, let me just pull up the first question. He said, yes, they are, but they could also be paid with personal funds, whichever is better.
What was he referring to?
The question that he asked.
Okay, I don't think we have time to scroll up through it.
Building 10 new warehouses, should we use personal funds?
Yeah, and what was the follow-up?
They are, but also could be paid with personal funds, whichever is better.
There's no such thing as whichever is better. You can do through with personal funds if you have the money. If you want to keep the money in an S corporation, Desi, this is a follow-up question for Desi, okay? Whichever is fine. As long as if you're going to do it alone, it has to be a legitimate loan with a contract and paid back. Or take a distribution from an S corp and put it into the warehouses, or from the personal funds into the warehouses. Either or, same thing. All right, guys, we're going to be announcing the winners. All right, let's do it. So, Marianne, you got the names for me?
Yep.
All right, the first winner is going to get thinking outside the tax box. Now, Marianne is going to put an email address. Guys, just email that email. Say, hey, I won the book, because I don't know how to look up your information as a subscriber. I don't think YouTube allows us to like take a look at your information. Let's go. All right, these are the 3 names.
These are the 3 names.
All right, guys, let me get the drum roll. Let's go. Boom. Can I get some drum roll? Can I see some drum roll in the comments? Let's go. Got 3 names here. We're gonna shuffle it up. Let's go. Can I get some drum rolls? Drum rolls, drum rolls. Let's go. Let's go. Drum rolls. I don't see any drum rolls. I don't think we're gonna be doing this thing. All right. Only Joe is participating. Can we just give the thing to Joe? All right. I'm kidding. All right. Let's go. All right. First paper. All right. Drum roll. Let's go. First one is Nostra. All right. Congratulations, Nostra. We're going to mail you this copy of Thinking Outside the Tax Box. Mariana put the email address. You just need to email that address. Be like, hey, I won the book with your address, and we'll send it over to you right away. Second one, drum roll. Let's go. You're getting the S Corporation Tax Secrets book. Let's go. Let's go. Drum roll, drum roll. And let's see whose name it is here. Joe got S Corporation Tax Secrets copy. So please email us with your address, and we'll mail it out right away. So the third winner, who got the 3-year look back. Ooh, 3-year look back. Let's go, let's go, let's go, let's go. Iron, congratulations, Iron. You got a 3-year look back.
Let's do one more.
Well, let's do one more.
One more book giveaway.
One more.
We did a $500 discount. Let's do one more.
Oh, Mariana is like on a roll over here. You're gonna make me go bankrupt like this, giving out my books.
It's not my job. It's your wife.
All right. One more, Mariana. Which book do you want to give away? S Corporation Tax Secrets book.
Whichever.
All right. Can we say hello? Yes, thank you, Mariana, for like doing another name over here. All right. So S Corporation Tax Secrets book. We're giving away another copy of S Corporation Tax Secrets book to Jules. Congratulations, Jules. This comes directly from Mariana. Okay. All right, cool. So our winners are Nastro, right? You're getting the Thinking Outside the Tax Box. Joe is getting the S Corporation Tax Secrets book. Iron, 3-year look back. Let us know, and I will email you all the instructions. Cassie says, write off the value of your books. Yeah, sure. Yeah, we've done that already. Done that. Okay, cool. Anything else? No, guys. Till next week.
Just write the link again.
Every week, Thursday, 12 p.m. Eastern time. By the way, how many of you saw that trailer, a nice trailer that we did before the live started?
Wasn't that awesome?
Need your email. Mariana's putting in the email. How many of you saw that nice trailer before the live? Let me know if you saw the trailer. That was a pretty cool one. All right. Saw it. It was great. Thanks, Nastro. See, you've been participating all along, Nastro. Look at that. Okay, Mariana is... so, Iron, Mariana put up the email, boris.musheyev@borismtax. You claim your prizes. Guys, we will see you all next week, Thursday. If you are interested to work with us, guys, www.taxplanningcall.com. www.taxplanningcall.com, and you get $500 off. If you're watching this replay or you're on this live, just mention the date of this live. Perfect. Thank you, guys. Take care. Mariana, you done posting?
Mm-mm.
All right.
There we go.
All right, there it is. I'm going to give everybody a second to get that. Thank you, Casey. We're going to give everybody a second to get those links. All right, I think we're good. Thank you, guys. Till the next week.